Good morning, good afternoon. Hello, everyone. Thank you for joining us today. We will be just giving the rest of the audience a few minutes to join. So as you can imagine, today is the start, or this webinar is to launch a report that Climate Bonds has done in partnership with SGX. I'd like to take this opportunity to sort of thank SGX for giving us support in providing research like this to the general public. It is support from organizations as such that helps Climate Bonds develop the research around this space and provide guidance to the market in terms of enhancing credibility when it comes to climate-themed finance. We now have 42 players, but let's give it another couple of minutes. As most of you know, we launched an SLB sort of a dashboard a couple of months ago. What we've done is Climate Bonds has fundamentally done a lot of assessment and evaluation of all the climate-themed bonds that have come out. We started off with green. We started looking at social and sustainability. And this year we've started analyzing SLBs as well, and the underlying transition plans. Climate Bonds has provided a lot of guidance in this space, and you can find all the documentation that is out there. I'm going to start now. I think it's time for us to start because we have 1 hour and we have a lot to get through, and we have such an amazing panel with us. I'm going to invite my colleague Miguel, who's the research manager and the co-author of the report today, to give us a brief overview of what the report is about. Okay.
Thank you, Zalina. Let me just share my screen. So, hello and welcome to everyone tuning in. Thank you so much for joining. My name is Miguel Almeida. I am a research manager in the market intelligence team at Climate Bonds Initiative, and we are very pleased to be presenting our new sustainability-linked bonds, building a high-quality market report. As the author, I'll be taking you through some of its key findings today, although, of course, I highly encourage everyone to check out the report for more detail. So this report is the first in-depth analysis of sustainability-linked bonds, or SLBs, globally. SLBs are general-purpose debt instruments, so with no restriction on the use of proceeds and with financial mechanisms tied to achieving or missing sustainability performance targets for the KPIs selected in that particular bonds. So, for example, a company may issue an SLB in 2024, this year, with the greenhouse gas emissions KPI and a decarbonization target of 30% reduction by 2028. If the target is not met in 2028, the issuer will typically pay a higher coupon rate to bondholders from that point until the bond's maturity. And this feature is called the coupon step-up. Now, like all our work, this report has the aim of growing the markets while ensuring credibility and ambition. In the case of climate objectives, these must align with the goals of the Paris Agreement, so well below 2 degrees warming. And the analysis and recommendations we've generated with this report can really support a range of market participants in their activities, from issuers to investors to standard setters, regulators, policymakers, development finance institutions. Really, the list is endless. The report is sponsored by the Singapore Exchange and has 4 core analytical sections, which I'll take you through today. The first 2, market profile and structural features, include the total SLB market up to the end of November 2023. The other 2, KPI performance and transition plans, are based on analysis of post-issuance disclosure, which is, for those of you who know, a very time-consuming process. So they're only based on a sample of the largest 50 issuers by amount issued. And finally, we also have a discussion and recommendations section, which includes recommendations and ideas to grow a high-quality market. And for those with less time, there is, of course, a 2-page summary at the start of the report, which summarizes all the key findings and recommendations. So let's dive in. We have a market that is quite nascent, only about 5 years old. The 2023 figures here that you see are only up to the end of November. That's when the analysis was conducted.
Miguel, I'm sorry to interrupt, but are you sharing your screen?
Yeah. Oh.
Now you are. Okay, cool. Thanks a lot. Great. Do you want to? Perfect. Thank you.
It clearly didn't click. All right. So we have a market that is quite nascent, as I said. 2023 figures on this slide are up to the end of November. That's when the analysis was conducted. Full year figures will be available in the global state of the market report that we're releasing in about a month. Now, despite the market having stagnated or actually contracted since its 2021 boom, as you can see on the top left, we do see increasing diversity of regions, of issuer types, sectors, and other aspects not shown here, such as currency. We also see a growing share of emerging market issuance. Latin America was actually the only region to grow in 2023. We can see that on the bottom left. And we're also seeing growth in public sector issuance, driven by Chile's and Uruguay's sovereign deals in 2022, and Chile returned to the market quite strongly in 2023. Also last year, we saw the first development bank issuance from the Development Bank of Rwanda, which was a small but landmark deal which could stimulate future similar issuance. And finally, 2023 was also the first year with issuance across all the sectors that we've recorded in our SLB database. The top 5 cumulatively are shown here. Utilities is top, driven by Enel, which is a familiar name and the largest issuer in the market. But the industrial sector actually has the most bonds and issuers and was also top by amount issued last year. In terms of structural SLB features, this includes things like KPIs, the targets, the financial mechanisms, and a few other factors. And broadly, what we find looking at the structures of SLBs is that there is a lack of quality and credibility which needs to be fixed for the market to reach its huge potential. On the left, you've got KPI selection by sector, which was quite a detailed analysis we did. And the use of KPIs broadly reflects the materiality of different sustainability themes in each sector, but far from perfectly. So many sectors have little or no use of material KPIs. And this suggests more work is needed, for example, through active monitoring from different market participants, through more prescriptive guidance, potentially through regulation, to ensure the material KPIs are being selected. And climate mitigation KPIs dominate, those are shown in dark blue, dominate heavily in almost every sector. By contrast, KPIs related to climate adaptation are very rare, as are those related to biodiversity. We also analyzed financial mechanisms shown on the right. So coupon step-ups are by far the most common financial mechanism, and they're often set at 25 basis points, which is also the average step-up. And that's per target, not necessarily per bond, because some bonds have multiple KPIs and targets, and therefore the step-up can be higher. The second most common mechanism are redemption premiums. And I would also like to highlight that there are several examples of bonds with both step-ups and step-downs, and that's to reflect different levels of ambition in the targets. So in this case, a coupon step-up will apply if a lower ambition target is not met, while a coupon step-down applies if a higher ambition target is met. And in principle, we're quite supportive of this structure. Another key aspect of SLBs is the structuring of the targets. So in 2023, we released a methodology to assess the credibility and ambition of GHG emission targets in SLBs, which is used to determine alignments in our database. And a summary of the process is shown here on the left. Basically, to be considered aligned, the KPIs must include all material scopes of GHG emissions for that sector. They must exclude offsets and not be based on economic intensity. And the targets must meet the decarbonization pathway of the respective sector. And that's based on our criteria where we have it for that sector. Now, based on this assessment, 3 categories of aligned bonds exist: fully aligned, strongly aligned, and aligning. The difference lies in the level of alignment of the targets versus the sector-specific pathway, with the latter 2 categories existing for bonds and issuers that may find it hard to meet the absolute threshold in the near term, but are still setting relatively ambitious targets. And JSW Steel, actually, which we're lucky enough to have on the panel today, issued an SLB which we considered aligning, for example. And the results on the right show that most of the market is not aligned, but the proportion is growing markedly. So in 2023, it reached 35% of the amount issued up to the end of November. And this is a really positive sign, which suggests that issuers are getting better at setting climate mitigation KPIs and targets. The previous findings that I've talked about are based on disclosure at or pre-issuance. We then also looked at post-issuance disclosure to assess the performance of KPIs. And this was, as I said, just done for the largest 50 issuers. To assess this, we defined three main results, as you can see on the top left. So one is the targets are currently met. Another is they are on track to be met. And finally, they can be off track. Now, it's a very simplified analysis, assuming a linear progression. So it's just indicative, but the results, which are shown on the right, show a market split in terms of its performance. Quite a lot of the market has KPIs off track, quite a lot has them on track. A smaller but decent chunk has targets already met, and those are mainly targets set up to 2025. And then there are also bonds, several bonds with mixed results. So for example, that is a bond with one KPI on track and one off track. And finally, we couldn't assess a number of bonds also due to lack of disclosure. So those are shown as NA. And there is, of course, much more analysis in the report, even by type of KPI. And there we see differences between GHG emissions and other KPIs. But broadly, this analysis also uncovers, well, the post-issuance reporting for SLBs is generally quite good, but we identified three main reasons for poor reporting. And those are, firstly, a failure to explain reasons for the evolution of performance from issuers. And that is especially in terms of providing quantitative contributions of each reason. Secondly, KPI data restatements, which are quite often happen due to M&A activities or changes in calculation methodology of the KPIs. And those are sometimes explained with lack of clarity, and especially their impact on outstanding SLBs can be unclear. And finally, inconsistencies in disclosure, so targets being different in annual reports versus SLB-specific documents, for example. And that's these three issues especially are something that issuers should take care to ensure they avoid. Now, the last analytical section of our reports assesses transition plan disclosure. Climate transition plans define the entity's decarbonization plans and targets, and they're intrinsically linked to SLBs. So essentially, SLBs are vehicles through which entity-level transition plans can be showcased to the market and used to raise sustainable finance. Climate Bonds released the Climate Bond Standard V4.0 in 2023, which, along with our sector criteria, enables the certification of non-financial corporates, assets, and sustainability-linked debt instruments such as SLBs, along with use of proceeds instruments such as green bonds, which were already included in previous versions. And it's a great resource that companies and others can use to make sure they align with best practices and make sure that their transition plans are credible. In our reports, we developed an indicative scoring system of transition plans based on the Climate Bond standards, with a maximum of 35 points available. Again, there's a lot more detail in the report, but a summary of the results is shown here. So basically, the top 50 issuers show a range of quality in their transition plans, and there is certainly a lot of room for improvements. But despite this, we did find examples of best practice in all of the criteria or elements that we looked at to assess the transition plans. So we identified several of these examples in the report, which can be quite useful. For reference, the top scorer was Holcim, which is a Swiss cement and construction company, with 27 points. Something else we included in the reports pertaining to transition plans is a proposed summary transition plan chart, which companies can use as a guide to essentially map their plans onto a chart so they're more easily visualized. And that would include the targets over time, the alignment of those targets against the relevant pathway, the levers the company is expecting to achieve those targets, and what financial instruments are expected to be able to deliver this. And this is just a summary of the chart shown here. There would be more supporting details which could and should be included, and these are listed in the report. Finally, we identified several recommendations which translate the many analytical insights from our research into practical action points for various market participants. So our core recommendations form a best practice checklist for issuance, covering the elements listed here. I don't have time to go into each element today, but issuers can basically use this checklist to structure high quality SLBs. Investors can use it as part of their screening methodologies, and regulators, standard setters, potentially others, potentially also stock exchanges, can adopt it as part of their guidance or rules. So far, by the way, there is only voluntary guidance in the markets, that's especially in the form of ICMA sustainability-linked bond principles, which almost all issuers use, but which are fairly generic. And then our climate bond standard also, which again is voluntary, but more prescriptive and technical. Now, as well as this best practice checklist, we discussed several other ideas in the report which can support the market's developments. In fact, they may be needed for the market to reach its full potential. To highlight one, and although it does require more thoughts about how it might work in practice, I do think it's a very interesting idea, which is an SLB facility to independently manage penalties and ensure standards of issuance, because at the moment there is this incoherence, which many people are aware of. The investors benefit financially when issuers underperform against their sustainability targets. And plus, the cost of not delivering on sustainability targets affects humanity, the world overall, not just specific investors. So it would be great to see, even though it does definitely require further thought about how it might work, conceptually it's an idea that makes sense, and it would be great to see, policymakers and potentially industry bodies thinking along these lines. And yeah, that's it for me. I really thank you for listening, and please do check out the reports on our websites. I've included the link here. Also, feel free to get in touch with me with any comments, thoughts, ideas. And over to you, Zalina. Let's hear from our panel.
Great. Thanks a lot, Miguel. Thank you very much for an amazing summary. Miguel, there are a couple of technical questions in the Q&A, which we may not be able to address it, talking about our methodology. So if you could have a look at that, that would be great. So I'm going to start the panel discussion. I've already picked one or two questions from the Q&A for you all. But let me start with Joanne. Joanne, thank you so much for joining us today. Joanne, based on what Miguel was saying, fundamentally, I think climate bonds is looking for policymakers and regulators to play a role in this instance as well. And as you are part of the regulatory side of the stock exchange, could you share your opinion or your views on what is currently being done in this space, and what kind of feedback you're getting from the market?
Okay, thank you, Zalina. So right now, I think for the sustainable bond space, we are trying to work on encouraging more sustainable bond issuances. So in 2022, we launched a sustainable fixed income initiative. It's meant to provide regulatory recognition for bonds that meet certain sustainable bond standards. So basically, if a bond has been independently verified to comply with established sustainable bond standards like the ICMA standards, we provide regulatory recognition. And these bonds get profiled on our website as well as on an ESG data portal called Green Note. And the issuers, they get to receive a sustainable fixed income mark, which they can use in their marketing materials. Right now, this regulatory recognition is limited to the bonds that use the use of proceeds structures, meaning the green, social, and sustainability bonds. For SLBs, we have kept it under review because it's still a young market, so we are watching developments in that space. So for SLBs, what we are focused on right now is on capacity building. That means working a lot with the issuers, intermediaries, market professionals on raising awareness on SLBs, raising awareness on the issues concerning SLBs, and the measures that can be used to address them. And one such measure would be the climate bond standards, which Miguel has mentioned is actually quite robust in addressing some of these issues on SLBs. So we are working a lot with the market to raise awareness on these latest standards.
Great, thank you very much. I'm going to go on to Norbert now. Norbert, from an Invesco standpoint, so from Miguel's point of view, what he said is when we assess SLBs, we have identified 35 to be aligned to our methodology. Does Invesco have a different methodology or assessment criteria when you're looking at SLBs?
Thank you, Zalina, and thank you for the opportunity to join the panel today. First of all, just like other investors, we do have a very vigorous framework of evaluating green, social, sustainable bond, and as well as SLBs. So there are kind of three pillars I would introduce in terms of how we evaluate it. First, definitely it is to how it maps to UN SDGs. So in the case where CBI's framework of climate mitigation as a KPI, that's completely in sync with our approach. Secondly, we do also look at the difficulty of achievement and the ambition in the reference KPIs for SLBs. I think this is very key, and I think the work that CBI has done on the climate transition plan, where you use science-based and also the ambition pathway, and also thinking about technology progress, is going to be very relevant. And this is what we do evaluate as a second pillar. And then the third pillar we do look at is also the external verification and the commitment to reporting. So that's what Miguel had introduced as to one of the conclusions that we need to work on, and also what Joanne had mentioned about SGX working on these labels, and also I think going forward, like how SGX has done the Sustainable Finance Initiative and also the use of external verification. These are best practices that we will look at a pre-deal stage and also monitor them over the lifetime. I'll just wrap up by saying that it's not just only about the SLBs that we evaluate when we look at these deals. Ultimately, it's about encouraging the issuers to undertake a climate transition strategy. So an issuer that doesn't have a credible climate transition strategy is less likely to have a good SLB score when we evaluate it. So it's about the holistic nature about driving transition that's also key, and SLBs being a tool to help them reach the end target.
Cool, thank you. I think based on what you're saying and what Miguel said, it sounds very daunting. I mean, if I was a corporate player, I would be, oh my God, that's a lot of work to do. So PC, lovely to have you on with us. As an issuer, right, I would like to ask one of the questions that came from the Q&A. Why would I do this? You know, so please tell us why you did it.
Thank you very much. I think that is very important question. And yes, in the beginning, it felt daunting. But before I tell why, we must understand who we are. JSW as a group, we are into steel making, iron and steel making, cement making, energy generation, port and terminal operations. All are hardcore industry sector and have a perception in the market about not being at least environmental sustainability front, the sector itself. We have issued last year 2 SLBs, one in JSW Steel, another in JSW Infrastructure Limited, but let me stick to JSW Steel, because the steel sector globally is on this spotlight icon, specifically with respect to environmental sustainability, because the sector is perceived as not environment friendly. And when environmental sustainability comes into picture, climate change specifically becomes the mainstay of having, because the steel sector contributes almost 7 to 8% of the emissions. So we decided that, and the other fact is that in India, we are operating mostly from India. And the Indian steel sector is growing, it is getting doubled. We are also adding capacity. So if we don't give the message that we are focused not only on growth, but also on decoupling my growth from emissions and being seen as a sustainable focused company, investor will always look me in the suspicion and all the stakeholders. So it's actually a way for any company by issuing, and we become the first company to issue the dollar-dominated SLB in steel, and that gives a message that we are serious. And in fact, that was the introspection, that why I will not issue a vanilla bond, borrow money, why I should go for SLB. So there was a lot of discussion internally, and we decided we must go for SLB because we must demonstrate, even if we speak that we want to decouple our emissions with the growth, how do we demonstrate? And this is one way to demonstrate. That's one. Second, I talked about perception. The second is commitment. Now, we had a public commitment of reduction of our emissions. Now, when we link it to the financial instrument, it takes, again, seriously, both internally and externally. So that is another motivation why we did. The third reason why we went for SLB, that we will remain focused. To remain focused, you give commitment which is linked to finances. So that helps in driving the sustainability into business practices. So it actually helps. So in a sense, my takeaway is that SLBs are good for business, specifically these so-called hard-to-abate sectors or real economies. So that's the reason why we went for SLB.
Great response, PC. Very much aligned to Climate Bond's 5 principles behind transition. Fundamentally, it's a great communication tool. Number 2, it shows that you're taking a pledge and you're being serious about it and you're committing to it. And you're ensuring there's internal sort of rigor around it. And by issuing an SLB, just having a commitment is not enough, but identifying the CapEx and the financial plans behind it is the best way to communicate to the world that you're serious about it. By the way, PC is the head of sustainability of JSW.
Yes. No, thank you. The other point I wanted to make, which is very obvious, we are the leading steel maker in India. We are the largest. So when you are leader, you have responsibility to lead in every front.
That's right. That's right. And you provide guidance to the rest of the market. I think that's the kind of sort of guidance we'd love to see from the industry. Peer learning is far better than learning from the rest of us. Joran, there's another question that's quite interesting here. And it reminded me of something we had discussed before, whereby the question is an SLB counterintuitive? Meaning investors gain when issuers don't meet their targets. I'd like to understand a little bit about, I know you've not started regulating or sort of insights into SLBs, but I'm sure you must be engaging with the market in this space. Have you heard any feedback from the market, given where Singapore is placed as a financial center? I'm sure there's a lot of noise and chatter around this as an instrument.
Yes, thank you. So there are 2 buckets of issues, I think, for SLBs. The first one, I would say, is on the SPTs, the Sustainability Performance Targets, and on their credibility. I think the common discussion is that the SPTs are not material to the issuer's business or are insufficiently ambitious. So to address that, we encourage issuers to refer to independent benchmarks that are available today. So for example, the ICMA has an illustrative registry of material KPIs for each sector. Climate bonds also have their own sector criteria for classification of activities that are aligned, like Miguel just went through. Then the next category of issues is on the product structure. I think it's important to recognize that SLBs are essentially a mechanism for issuers to demonstrate their commitment to achieving their sustainability targets. So the structure needs to provide that skin in the game for the issuers. Most SLBs now adopt this step-up model, where essentially there is a greater step-up coupon paid if they miss their targets. I think a common issue is that the step-up rate is set at 25 basis points, and that seems to be a de facto rate, regardless of the economics of the bond. So that may not be very meaningful because the level of penalty should necessarily depend on the original bond coupon, on the issuer's credit, on the level of ambition, for example. So I think issuers need to be more thoughtful and calibrated in determining the level of step-up rate. Another issue is on what I call penalty minimizing mechanisms in the product structure. There have been concerns that the SLBs tend to have these gaming structures. For example, I think a study from the World Bank found that SLBs tend to be more often callable than green bonds or even other corporate bonds. And also that the SPT sometimes are only set close to maturity, so allowing issuers to evade penalties until the end of the life of the bond. So I welcome the introduction of tighter standards around this product structure. So for example, in climate bond standards, it requires that bonds are not callable until the first observation date. and also requires that interim SPTs are set on a 3-yearly basis throughout the life of the bond. I think if issuers adopt these standards, it would really help to signal their commitment to achieving their targets.
Great, thank you. So Norbert, now you're in the hot seat as a representative of the investor universe. Carrot or stick? So there are no regulations around it. There's no, we can only provide guidance as the civil society just say these are the best practices, but the buck stops with investors. So essentially you can change behavior through your investment pattern, through your engagement strategy. Where does Invesco stand on this?
I think I just want to pick up on a few points that's mentioned and add on to the question that Zalina had added. So I think first of all, the question about the level of penalty, is it appropriate? Do you pay? And why should the investor be seen as benefiting? So I think typically what we advocate is that when you have a step up, whatever the penalty is, regardless whether investment grade or high yield, it sets a line in the sand and you put your reputation on the line. No company wants to wake up and see itself as a headline, say, I have issued a bond that has failed to meet its target. So I think the reputational angle is quite positive reinforcement to help issuers hit the publicly commitments. Then the second comes to point of how do we treat cases if an issuer is at risk of missing the targets? And I think Zalina and Joanne both talked about the interim target, the target setting process. So I think if we use the example of the green bond market initially, how it evolved, where people who were very impact focused chose to divest green bonds or not to invest in certain green bonds when they were not confident on the assurance. Is this going to be the case with the SLB market? I think the way I would approach it as an asset manager or even for other asset owners to think about it is this in line with what you have in terms of your portfolio target of decarbonization? So if you're owning a hard to abate sector that is not committed to decarbonize and a sustainable growth, that could bring further questions about what you think about the underwriting, the ESG quality of the issuer within your portfolio. I'll kind of finish up on this point about the carrot versus the stick angle. I do believe that the carrot is always a more effective tool. I think as bondholders, when we engage with issuers, we tend to encourage them and also from a capacity building and work with the issuers before the deal comes to market as to what's the right KPI, what's the right level of ambition. And I think this is how together as an asset manager and with the issuer and the real world, we can work together to get a real world reduction on emissions. And I think so far we've heard the case about the hard to abate sectors. I do see very interesting use cases in the low emitting sectors because these are sectors that are not necessarily high in capex, hence a green bond may not be appropriate for them, and hence they want to make a commitment by corporate strategy and SLB. So that's the beauty of SLB, it's actually open to all sectors and of different flavors.
Yep, that's the whole point of the SLB coming into the market, because it just gave more room for innovation and more room to sort of bring in other sort of businesses expenditure when it was not a clear identified activity or asset. No, but I'm going to stay with you now because I'm going to ask a very cheeky question. And I know PC has going to have a lot of views on it, and Miguel will have a view as well. But I'm going to stay with you. So now the question is, do you think there should be one global pathway for all transition plans in SLBs? Should it be 1.5? Or do you think that different countries, different regions should have different pathways?
Thanks, Zalina. So I think first of all, when I think about bond issuers to invest in, some are local, but some also local with a growing international scale. So when you think about Indian, Chinese, ASEAN companies, they're exporting to the rest of the world. So I think that in many cases, there's a very strong argument to be said that you have to look at the global sectoral pathway and how you can get there. And typically, I would say if you were to head, you can wear a hat as a credit research analyst. When you see these plans of decarbonization, I think PC made a point earlier, you have to show how much money you can spend on capex. So these are things that will come into our equation as we evaluate national versus international pathway, how much a company needs to spend to get there. Another point that I think is also very interesting and also very kind of pertinent to this issue is that I think as we see over time, we've gone through many editions of COP, you see national pathway being upgraded. And also you do see many local companies actually take the initiative of being more aggressive than the national pathway in decarbonization. And that's the journey we want to encourage issuers along this roadmap of challenging yourself to raise the ambition. So like earlier, I referenced the example where ambition is one of the key tests that we use in the SLB when we evaluate it. And a lot of times, we as an investor, we do have some certainty or probability of how likely is that KPI going to be met and how de-risked is that target. And oftentimes when we see an issuer that starting from zero, going to a very aggressive phase, it does raise questions, but we know that it takes a big effort, but we encourage the issuer to take this leap of faith because national plans will be upgraded towards the global sectoral guidelines. And I think this is the kind of long run trend that will continue.
Yeah, we've seen that as well, where countries have shifted their NDCs as they go along this path. PC, I know you're dying to say something.
No, thank you. I mean, on that question, is the most important is that is your pathway is ambitious, but does it take practical? Is it pragmatic? It's going to happen. I sincerely believe
pragmatic. What does that mean?
Yeah, I will come to that. And before I answer that question, let me tell on the question of whether everybody should follow the same trajectory. See, ideally, we love to everybody follow the same trajectory, but that's not the way world operate or industry operate. Different sector has different challenges to decarbonize. Different region has different challenges to decarbonize. Now, let us consider the steel sector. The steel sector decarbonization, you cannot expect the way Europe can decarbonize, where the scrap availability is already there. Same thing you cannot have in India, where you are recently growing and you don't have the scrap. So and the other technology, the hydrogen technology, if you want to use, which is not viable, that means the investment doesn't support. I will not get money to invest because there is no return to offset the cost. And that is where viability gap funding is required. So therefore, imposing one trajectory for the whole world, for the whole sector, I don't think that is pragmatic. That is what I mean, what pragmatism is. I completely in agreement as the world, we have to follow 1.5 degree scenario and we all need to. Not necessarily every region will decarbonize at the same rate or same pace, and not necessarily every sector also will decarbonize at the same pace. But as a whole, some has to take a faster pace. Some sector will take a, it will take different time frames. So having one solution fit for all is not the solutions. And that is the reason even I would see that, SBTi also need to take regional context into account while giving the SDA trajectory. The other point, you just cannot go on reducing your emissions year on year, right? Because technological development doesn't progress year on year. We all understand technological progress happen and it follows the exponential pathway. Initially, it takes time. Later, it becomes faster. And that is the way we need to think when we think of decarbonization for different region, for different sector, and the global decarbonization. And that is the reason, if you see, the NDCs are all not same.
Yeah.
But I also agree that the NDC need to be accelerated. But the acceleration point, we need to decide. It doesn't happen arithmetically in the same rate and same pace every year. It doesn't happen. And that's what I mean pragmatism.
No, I totally agree. Very valid and solid points you're making here, PC. Miguel, what's our response?
Well, I mean, in an ideal world, yeah, it would be, more developed regions would be contributing more to the decarbonization, let's say. So fully agree with PC. I wonder in practice how that would work, because we don't have a world government which can manage those differences between regions. But yeah, in our database methodology, we do have two categories of alignments which allow for a milder let's say, alignment versus the pathways. So we do recognize that not all regions and sector and types of issuers may be able to meet that, and we do have that in place.
Great, thank you. I think that's something that I would like the audience to know, that climate bonds does recognize these challenges. If you look at our sector criteria, especially for the hard to abate, we do recognize the different nuances, and we do make recommendations, as Miguel was mentioning. Joanne, I'm going to come back to you. There's a question from the floor. What specifically can financial regulators do to encourage SLB issues? I know you're not a financial regulator, but given the hat you're wearing at the moment.
Yeah, so I think at SGX's end, we'll focus a lot on capacity building. So raising awareness on SLBs and on the issues and how do you build a more credible SLB. Also at the MES's side, there are schemes available. So I mentioned earlier about the Sustainable Fixed Income scheme on SGX. On the MES side, there's also a sustainable bond grant scheme that issuers, including SLB issuers, could apply to offset the cost required for external review. So SLB issuers looking to list bonds on SGX can consider applying for that grant as well. And maybe if I take a step back and I talk about transition planning in general, that actually is I would say, the cornerstone of even setting up an SLB. In fact, I found there was a very interesting finding in the research report that there's a clear and strong positive correlation between SLB issuance and the quality of a company's environmental disclosure. So I think what we are doing as an exchange right now is encouraging issuers to do transition planning, and from a regulatory front, requiring issuers to adopt the ISSB standards, for example. So once issuers, I think, become more au fait with getting their clarity on where they are, I think over time, transition planning will be natural direction of travel. And then thereafter, taking the opportunities like tapping into the SLB market, once they have that clearer idea of where they are in terms of their emission numbers.
On that note, Joanne, do you think at some point transition plans could be a point of reference for equity investors?
Definitely. I think currently in the equity space, we are focused on getting regulatory adoption of the ISSB standards. So that at least sets the baseline of environmental disclosures. And I see it as, if you don't know where you are, you can't plan where you want to go. So I think getting that clarity of where they are right now is what we are focused on right in the regulatory front. And then over time, I think when issuers have that numbers in front of them, whether it's from regulatory reasons or commercial motivations, I think they'll be more inclined to start acting on those numbers. For example, coming out with transition plans or tapping the SLB market, or from, say, carbon tax savings, for example. So I think that is a natural direction of travel once issuers have a clearer idea of their numbers.
Yep. I think the challenge here is when you say over time, or we're using capacity building and technical assistance to help the real economy players, how much time is this going to take? Do we have the time to fast track everyone to create the most credible transition plan? I think in climate bonds, our view is just start the journeys, just start asking that questions internally, start figuring out the pillars of your transition plan. At least that gets you going rather than researching it, analyzing, and going forward. Now, but there's a question from the audience. Why would you invest in an SLB as opposed to a conventional bond?
Thanks for the question. I think there are three areas that SLB does provide a strength versus a conventional bond. Firstly, as what we heard from my fellow panelists, it's a very serious commitment that a company is putting in writing into a bond documentation. This is not something you benefit from an equity side. This is something legally informed, and it's a very strong line in the sense that a company is committed to its target. I think that that's a very strong signaling. Second, I think it comes back to when a company develops a SLB plan, they are thinking very holistically about the climate transition strategy, what CBI has put out the best practices on climate transition. And this ties in very much with how if I look at how like regulators and even the clients are asking us to do more environmental risk management. So when you think about SLB and the targets, this actually mitigates the environmental risk management angle that these companies are going through. And the last point I would say that I think is very relevant as investors, regardless of fixed income or equity, is that when the company is issuing SLB with a plan, there's also another plan on the business side, as what PC had talked about on the steel business growing. So we also like to know that this company, what's its business plan the next 5 years, 10 years, more hopefully in green revenues and green products, and that gives a feeling of the growth. And as a creditor, I want to know that this company is doing well. I get my money paid back. As an equity investor, I want to see the cash flows and be paid dividends. So this combination of the credibility, and also second, how you manage environmental risk, and third, the growth angle where issuers think about it holistically, make an SLB issuer more attractive compared to a conventional issuer.
Great. So essentially insight into long-term growth strategy rather than providing you short-term opportunities.
Agree.
Let me ask a follow-up question to Norbert, please, Zalina. So, I mean, that makes sense in that you look at the issuer, you're more interested to invest in the issuer, but what about so once an issuer has issued an SLB, would you be more likely or more interested to invest in future SLBs from that issuer, or would you be fine just to invest in vanilla bonds from that issuer?
Yeah, this is a question that we have debated a lot amongst ourselves. So one of the benefits I think an SLB does provide is that if you're issuing a 3-year bond and in future come a 10-year bond, we get a different intermediate pathway that is built up. So if a company has a 2030 target and 2050 target, and it's a regular issue of the market, you start to see the curve, how it looks like in 2025, 2028, 2030, 2032. So I think this is the assurance that SLB does provide, and there's an additional positive. The second part, which I also think it's also very important, is that the growth of the SLB market also means you're drawing in more like-minded investors who actually care a lot about the trajectory of the companies. So as a company, when you develop this SLB curve overall, this is likely going to help the company to get attract more flow of capital, because this is now seen as one of the recognized labeled bonds in the market as well. And last point, if I were to be greedy, I think Miguel, I'll phrase your questions differently. I think the question should be asked, why not we have both an SLB and user proceeds bonds all in one to get the best of both worlds?
Cool. PC, I'm going to bring you on that point, which Norbert mentioned in terms of the curve. I think one of the key burning questions that issuers grapple with is, how do I set my SPT? Could you just sort of share your experience in terms of how you developed your SPT? What were the building blocks in identifying it?
Oh, thank you. I think that is the point we discuss, in a sense, whether everybody should follow the same pathway. It's related. I think 3 important questions we have to ask ourselves before arriving at the right SPT. Is that whether the target we are setting at relevant for my operation, is it material? For our case, when we discussed, a couple of points came, like whether we set a climate change target, whether we should set a water target, because we are water consuming, plus India is a water scarce country, or we should put a nature-based target like biodiversity target. So we had debated. But then the climate change related to steel industry is the most significant issue. And that is where we decided that let us put the target as climate change target. And CO2 is the most important, relevant issue that we need to address. So that becomes, and then we decided to give an intensity target. The next question came, and that where we had a lot of debate and got views from external world, is that, is your target ambitious enough? And that is where your transition pathway come into picture, and peer comparison come into picture, the sectoral targets come into picture. In our case, we demonstrated our target is ambitious in 2 ways. One, it is aligned with IEA's sustainable development scenario. We find it very difficult to align with the SBTi. Okay, and that's not possible. Second thing, it is way above what India as a country has committed in NDC for that sector. And that was ratified by an independent SPO, second party opinion provider. And the interesting thing is that I want to take this conversation from your previous question. This target, when we set to the market, it was oversubscribed by the investor. That means investor also gave a confidence and ratified that the approach what we are taking to become setting ambitious target is justified, taking account of the regional differences and the technological availability and the growth scenario. Three things. So yes, setting the SPT is the most important aspect when it comes to issuer, and choosing the right KPI and setting the right target is the most important one.
Yep. I think that's the key one. But the interesting lesson here, I would say, is materiality, what you're able to do, and benchmarking. I think benchmarking and getting that external feedback from external stakeholders into the whole process, I think is the key differentiating factor when you're building a transition plan, because you're not in.
Yeah, Zalina, sorry for interrupting. Is it relevant? Is it credible? Is it ambitious? Is it being supported by independent external people?
Yeah. I
if
think those
all are peak, then SPT is right.
Yeah, cool. Great. Thanks, PC. Thanks a lot, PC. Okay, now we have 9 minutes left. So we're going to do a roundup question. And this is going to be the same question for everyone. What do you think is the next thing? Where do you see innovation should be coming from in climate themed finance? Joanne.
Thank you, Zalina. So I think I would like to talk about something which I think touches on some of the earlier discussions about the international regional pathways. The Singapore Asia taxonomy was recently launched by the MES at the end of December last year. So it's a relatively new taxonomy. And going back to the earlier conversation about having an international pathway and a regional pathway, the Singapore Asia taxonomy provides contextualized application of, say, the global EU taxonomy in a Singapore Asian context. And I think this will be very useful for SLB issuers or transition finance products to refer to. Basically, the taxonomy sets up a traffic light system for green activities, which are activities which are aligned with the Paris Agreement, and then a very important transition category, an amber category, for activities which are not yet aligned but moving towards alignment by a certain prescribed date. And this will be particularly useful for sectors where it's currently challenging to meet the emissions pathway due to technological constraints, and allows issuers to tap into the SLB market in a practical manner. So I think the industry is still developing use cases for the Singapore Asia taxonomy. But I think when we talk about benchmarking for SLB issuers, I think the Singapore Asia taxonomy will be a very useful tool for them to reference and benchmark the SPTs.
Great, Joanne. I hope you don't mind, but I'm going to do a selfish shout out. Climate bonds helped with that taxonomy. No, but your views, please.
Like, looking into innovation for the SLB market, I think where we hope to drive innovation is that where we can align the success of the KPIs with the investor outcome and issuer outcome. So I think this is where it overcomes the question about why should an investor get paid if an issuer fails a KPI? I think the question should be reversed to say an investor gets paid only if the issuer meets the KPI. So I think that is the direction that I think the SLB market could be moving towards. How we apply it and what kind of use case and kind of example case studies, just throwing ideas out. I think this can work very well in project financing when you're lending money to a certain project where it has designed well from an impact thesis and from an execution risk. And for example, if it's a project finance that's linked to for example, the generation of voluntary carbon credits, and that's a KPI reference in an SLB structure. You get a higher coupon if it hits the high end of the voluntary carbon credit generation, and you get a lower if it's a badly executed and badly implemented. So just throwing an idea out that this is where we should think about moving the SLB market towards driving the greater alignment with investor interest and issuer interest, i.e. you get paid for success, just like how we look at traditional bonds and stocks. You buy a bond, you buy an equity, the company does well, you benefit from that. So that would be my hope for innovation as to how we as an ecosystem can drive towards that.
No, and we definitely love that idea. We would love to endorse that idea as an organization. PC.
Well, I think, see, as an issuer, we find SLB itself is very beneficial. I mean, it provides me access to better quality of funding. It helps me to have longer term tenure. In our case, in fact, it has helped me to reduce my cost of capital in terms of getting oversubscribed. So we could tighten the coupon rate. So it's great. And I love that more and more SLB get issued. It really helps in decarbonizing the industries. So it must continue. If I have to change, if anything has to change from an issuer perspective, both carrot and stick should be used. Maybe because we have given only coupon step up as a penalty, but the company should also get benefited like SLL, that if you achieve your target much ahead of your time, or in the same time much below than your SPT target, there must be some coupon rate down also, some benefit should happen. But it's a great instrument. I would love to see that it is encouraged and more issuer use it, specifically in growth market, emerging market, where there is a need for investing in transitions.
Yeah, no, agreed. Great. Thanks. Lovely response. Perfect response as usual, PC. Miguel, closing words.
Yeah, thanks. I think I'll just return to one of the core messages of our reports, which is the SLBs have faced a lot of criticism, especially since their boom in 2021. Our report has shown that these are largely valid concerns. So there are definitely issues with the market, but I think the problems lie in, also Joanne mentioned this earlier, in inadequate structural and calibration features and weak underlying transition plans. So not with the sustainability linked concepts as a base. And in fact, I would argue, the sustainability linked model is extremely promising because it provides really a powerful bridge between financial and sustainability performance. And we don't really see this with other instruments. And I think it can be a really effective mechanism to correct for externalities, which we need to do to be able to transition to a sustainable system. So to realize that huge potential, we need to fix the issues, we need to have the necessary quality, and crucially, we need to facilitate that process through clearer guidance, clearer rules, potentially, and also through bold and coherent policy that incentivizes issuance. And if that happens, I don't really see why there's any reason why in the future all financing shouldn't be tied to sustainability outcomes.
Great. I think next time we do something like this, we should invite an investment banker to hear their views and opinions on the structure, because that seems to be one of the fundamental issues here. Thank you very much, everyone. I really enjoyed this, even though it was at 7 a.m. in the morning. It was great getting up and having this conversation with all of you. Thank you so much for joining us. Miguel, great report. Thank you so much for all those insights and sort of foundation for us to have this conversation. SGX, thank you for your support. Norbert, lovely to speak to you as usual. PC, great advocate, poster child for SLB. Please carry on the fight. Thank you very much, everyone. Thank you to the audience for joining us. I hope you found this as insightful and as interesting as I did. Catch up with you guys soon. Take care. Bye.
Bye-bye.
Thanks.